What's up, everybody? I'm Logan Moody. This is The Contrarian. Today I'll be talking about a new update. It looks like both Michael Burry and Elon Musk finally agree on something, and it's not a good thing for the US economy. They're both agreeing on a severe recession for the upcoming year. As a lot of you probably know, Michael Burry has been critical of Elon Musk. He believes that Elon Musk has probably led to the egregious overvaluation of Tesla's stock in the last couple of years. Elon Musk has said, of course, that he's had nothing to do with it, that it's purely the market that's sent it there, but there has been some back and forth that's gone between them. Michael Burry has also been short Tesla stock in the last year and a half or so. He isn't short anymore, but it actually does look like they finally agree on something. This is not a good thing, however, for the average US investor, on the other hand. So today I'll be taking a look into what both of them are saying and also the data behind it, how it is actually looking like the Fed has tightened way too much at this point, and it does look very likely that we're heading into a severe recession right now. So first off, I'll read both of their respective tweets, starting out with Michael Burry. He can be followed on Twitter at Michael J. Burry. Michael Burry says, "What strategy will pull us out of this real recession? What forces would pull us so? There are none, so we are really looking at an extended multi-year recession. Who is predicting this? There are none." Now, there are some other people who are predicting this along with Michael Burry. He's definitely referring to the more mainstream economic media, of course, the CNBC, Bloomberg. He's pretty correct in saying that there is nobody out there that extremely bearish on these mainstream sites. So Michael Burry is essentially saying that there is a severe backdrop to the economy right now. A lot of people are ignoring some clear economic data of just how dramatically the economy has slowed, and all things are pointing toward a multi-year long recession in his point of view. Now, Elon Musk's tweet goes along pretty much the same lines. He's responding actually to an investor in Tesla who is saying, "I'm expecting a real economic recession in 2023. Be prepared." I would assume he means prepared for any macro storm ahead of us. That's Vincent Yu. Elon Musk replied, "Trend is concerning. Fed needs to cut interest rates immediately. They are massively amplifying the probability of a severe recession." So, in typical Elon Musk language, he's essentially saying that yes, the Fed has way overdone the tightening, and they are rapidly worsening the probability of a severe economic recession in the coming year. So, just how dramatic has this Fed tightening really been? It has been very dramatic. Going from basically 0% on the Fed funds rate to now around 4% where we are right now, that is a crazy degree of tightening to undergo in under a year. And in fact, it is the most dramatic tightening cycle we've actually had in modern monetary history. Looking at the Federal Reserve anyways, looking at major central banks, it is the most dramatic tightening cycle that has occurred. And even though going from up to a 4% Fed funds rate isn't anywhere historically significant, looking in the long-term picture, it is very significant considering how much debt load there is on the economy as a whole right now. It is very significant. If you go from dealing with a debt at almost 0% interest on debt to 4%, all of a sudden you change the math very, very dramatically, and you very quickly worsen the probability of a upcoming recession. So unfortunately, both Michael Burry and Elon Musk are in agreement on this point that pressure for a severe recession is very high right now. Elon Musk is saying that in order to lessen this probability, the Fed would need to immediately cut rates. Unfortunately, the Fed is very much, in fact, they're always behind the curve. They were way behind the curve. They were about a year behind the curve in terms of tightening, in terms of recognizing that inflation was a severe threat and acting on it. They were about a whole year behind the curve there. They're going to be way behind the curve in terms of actually pivoting and cutting rates. So unfortunately, I'm not in the camp of, the Fed's going to immediately see this and act on it. They're very slow to act. They have to be very methodical. They have to justify all of their actions, or at least attempt to do so. So they're going to be way behind the curve. Unfortunately, that's what I'm expecting. So unfortunately, I would also have to agree with these guys in terms of saying that, yeah, the probability of a recession in the coming year is very high. In terms of what happens between now and when it really starts being recognized in the mainstream media, I don't know. There could be a somewhat of a rally, as what David Hunter has alluded to. I know a lot of people out there are very skeptical of David Hunter at this point. I actually don't think he's that crazy for continuing to think that a final rally in perhaps the beginning of 2023, I think that could still be on the table if investors are more so looking at the Fed pivot as opposed to looking past the pivot in terms of why the Fed is pivoting, the economy being so bad. If investors simply focus on doing what they've been so ingrained to do now with just going risk on automatically when the Fed begins to show any signs of pivoting, that could very easily lead into a melt-up kind of scenario. I'm obviously not banking on that happening in the broader equity markets. If you've seen some of my past videos, I really do like gold and silver equities. They do very well during recessions. They do well when the Fed is printing money as well and quantitative easing is going on. So all of this being said, I really wanted to highlight what these two somewhat opposing figures in the mainstream economy and media are saying right now. They're actually agreeing on something that I think is very important to point out. So all of this being said, let me know what you guys think about this down in the comment section below. The Fed's tightening cycle, how dramatic it's been, economic recession in the coming year, how likely that could be. I'd love to hear all your guys' thoughts down in the comment section below. But all this being said, I hope to see you all again at some point. And just consider subscribing to this channel if you like this kind of content. So hope you all have a really good day.